was Tom Lee, Fundstrat Global Advisors, managing partner and a CNBC contributor. But close enough for government work. You're right again. And once again, your rationale was borne out. It was that inflation would continue to cool. It's July 1st. You have a new target for the end of the year, or I've already sort of foreshadowed some of the things you were talking about. The S&P earnings might even be above what you thought.
Yes, I think that now that we're at the mid-year, 2025 earnings look a lot stronger than we thought at the start of the year. We thought maybe 260. It's probably closer to 275, maybe 280, even 285. And I think the multiple we thought originally could be 20 times that number for next year. But given the Fed has more reasons to be dovish, and I think maybe the employment picture is softening, PE multiples actually could be higher next year. So I'd say between now and year end, stocks should be higher. I mean, we've had a strong first half already, and second half won't be as strong as the first half, but we should build upon those gains. So, yeah, it looks pretty good.
You have numbers. I mean, so if the S&P is 285, you possibly, that's earnings,
correct,
285, up from 270. Because the economy doesn't cool, multiples don't expand. In fact, they might contract from 21 to 20. So if you multiply 20 times 285, you get to 5,800.
Yeah, so that sounds like it would be within reasonable, as a reasonable base case, that stocks don't have to have a prodigious second half. They just have to follow what typically happens in the second half, especially in an election year.
So 5,800 for the year, what would that be the total return? If it's 15 now, so
so it's, it's a little bit more than 20%.
Which would be after last year's
24.
24. That's a couple of years no one really expected, I don't think.
That's right. I mean, that's painful for people who've been sitting in cash for 2 years, earning 5% because they missed out on a 50% gain, and that's 10 years worth of sitting on cash. So I think the end of this year is a little bit of a day of reckoning for those who've said, oh, I'm happy with my $6 trillion in cash earning 5%, when in reality, unless the economy is rolling into recession, the expansion will continue for some time.
Is the $6 trillion, and that's what's fueling this, the additional liquidity, people aren't fully invested, was that gotten through organic positive means, or was it gotten through stimulus that shouldn't have been probably legislated and shouldn't have been printed? Is it good money, or is it money that comes home to roost because it's too much?
I haven't deconstructed that, but it's a valid point because, we are running a pretty big fiscal deficit at a time when it's not necessary. There is a lot of earned income on people's assets. I think that accounted for a lot of this increase in cash. And historically, that would have been reinvested in the economy or into equities, but it's been instead earning cash.
You know that my insecurity about crypto manifested itself again in my feet of clay, because I said, Tom Lee's going to be absolutely right about the 5,500. Why is he still saying 150 for Bitcoin? Why do that? Why not just focus on stock? Don't stick your neck out, because it was falling below 60,000. Now it's back to almost 63,000. So that $6 trillion we just talked about, that sort of plays into your Bitcoin thesis.
That's right. Bitcoin's probably suffering from the Mt. Gox, starting distributions in July. That was a huge overhang for many years. But if I was invested in crypto knowing that one of the biggest overhangs is going to disappear in July, I think it's a reason to actually expect a pretty sharp rebound in the second half. So I think 150 is still within.
It's already July 1st, so so you're not taking that off the table. That's still a possibility.
That's right. And one thing to keep in mind, Bitcoin makes most of its gains with 10 days every year. If you take out the 10 best days in a single year, Bitcoin actually has negative returns.